Hey everyone, welcome back. So in this video we are going to solve another paper 2 type question which is from November 22 paper 22. So let's begin. The question says MG has been in business for a number of years as a furniture manufacturer, and on 31st August 2022 the bank column of his cash book showed the business has had 25,600 in the bank account. Okay, this is the balance as per bank account, which is a positive balance as the question is silent. So 25,600. Then it further says the bank statement on the same date showed a credit balance of 24815. So a credit balance means a negative balance in the cash book, but a credit balance in the bank statement means a positive balance. So plus sign. And the amount is 24,815. So of course they are not matching with each other. Now we are also told the following transactions were included only in the cash book. So they were there in the cash book but absent from the bank statement. Of course they will require adjustment in the bank reconciliation statement then. And these are check paid to JW. Now check paid to JW existing in the cash book will be on which side? On the credit side, of course, and that will be an unpresented check. So it will require an adjustment in the bank reconciliation statement. And the second is check received from TH. Received means being recorded on the debit side of my cash book, and that will be adjusted in the bank reconciliation statement as uncredited deposit. Further, we are also told that in addition an error had been identified. A standing order for rates 205 had incorrectly been recorded in the cash book as 255. Okay. Now error is in the bank statement or in the cash book? It is in the cash book, right? It says that the amount was 205, however it has been recorded as 255. And a standing order is a payment being recorded on the credit side, so we have credited $50 more in the cash book, however the amount was just 205. The error needs to be corrected. Will it require correction in the bank reconciliation statement or in the updated cash book? In the updated cash book, because the error is in the cash book, not in the bank statement. If the error is in the bank statement, it will be corrected through bank reconciliation statement, but right now the error is in cash book. The question further says the following transactions were included only on the bank statement. Existing only in the bank statement means it will require adjustment in the updated cash book, and these are dishonored check received from RJ. Of course it will be adjusted in the updated cash book, and that too on the credit side. We already know the format. Then insurance paid by direct debit, again an expense, will be adjusted in the updated cash book on the credit side. And lastly, bank charges, again an expense, will be adjusted in the updated cash book on the credit side. So this is how we read the question. This is how we identify that which item require adjustment and in which statement. Now the requirements are in first part A. We are required to update the cash book and bring down the updated balance on 1st September 2022, as all the adjustments will be made on 31st August 2022. And in part B we have to prepare the bank reconciliation statement, right? So I have an idea, let's prepare the two simultaneously so that we save time and we can follow the same practice in exam as well. So in updated cash book we know that the dates are August 2022, August 31st, and we always start with the balance brought down, which is given the starting, that is 25,600. Now the same we will do in the bank reconciliation statement as well, that is balance as per bank statement, and it is a positive balance, which is 24815. Okay, balance as per bank statement 24815. Now the adjustments, the first one is existing only in the cash book, so they will require adjustment in the bank reconciliation statement. An unpresented check will be subtracted 680, and uncredited deposit 910 will be added. So let's write these two in the bank reconciliation statement. right? These are the only two adjustments because the error was made in the cash book. This will require an adjustment in the updated cash book. So these are the two only adjustments. Now this will give me a balance as per updated cash book of 25,045 25045. Now this is my balance as per updated cash book. This means that when preparing my updated cash book, the balance carried down should also be 25,045. Now we have already written the brought down balance. Now the adjustments are, let's adjust these items first, which will require an adjustment on the credit side. The first one is dishonored check from RJ. So same date 2022 August 31 RJ, and the reason is a dishonored check amounting to 420. Then the next is insurance and expense, which is a direct debit 110, and last is bank charges amounting to 75. The error was we were supposed to record the standing order of rates amounting to 205. However, we have incorrectly credited this transaction with 255. So right now I have overstated my credit side by how much? By $50. In order to correct this error, what should I do? I will increase my debit side so that the overstated amount offsets the error. So 50 should be debited in my updated cash book, same date, for rates, the reason being a standing order. That's it. Now we have to extract the balance. 25,600 plus $50, the total would be 25650. And the balance carried down would be 25650 less 75 less 110 less 420, same 25045. So this is reconciling with my bank reconciliation statement. And lastly, I was also supposed to bring down the balance on 1st September. So September 1st balance brought down would be 25045. And let's move towards part C. Part C and onwards are theoretical parts. I've already written some answers so that you can get an idea that how we can attempt such parts. And if you have more points, of course you can write in your own words as well, your own points. The first part C, is state 2 reasons why a business would prepare a bank reconciliation statement. So we have already discussed in the uses of bank reconciliation statement video the reasons for preparing bank reconciliation statement. I have written 2 over here, which are the bank statement assists in identifying, in deterring, in discovering fraud by providing a means of verifying the cash book balances. Bank statement we have already discussed, it's an independent statement provided by an independent party, so it does help in identifying or locating any fraudulent activities going on in the business. The second is very easy, that it identifies and then adjusts checks not presented and checks not credited by the bank. So unpresented and uncredited checks can also be located, found, and then adjusted through bank reconciliation statement. You can also write points such as it helps in identifying dishonored checks, that is out of date or stale checks, or any omissions or any errors made in the cash book can also be corrected. And similar points such as any standing order or direct debit payment, etc., can also be written. Part D says state 2 possible reasons why the checks from RJ was dishonored. Why the check from RJ was dishonored, that we corrected in the updated cash book, and this again we have discussed. The reasons could be, the 2 that I have written are, there could be insufficient funds in the drawer's account or in RJ's account, and the amounts in words and the amount in figures did not match. The check could be a stale check, as it was written, for instance, 6 months ago, and now it is not valid, or there was some overwriting on the check. The dates were not correct. The signature wasn't authentic. Okay, so these reasons could also be written. Then the next is explain the difference between standing order and direct debit. Again, we have discussed there's only one difference, and that is, in standing order, we allow the bank, we instruct the bank, or we give permission to the bank that it can make payments to customers or to businesses, to persons on our behalf, and the payment and the date of these transactions are fixed in standing order. However, in direct debit, the payment and the amount or the dates are irregular, that is, they vary in amounts. This is the only difference between the two. The last part is a potential new customer. This is a big question. However, it is not related to bank reconciliation statement, but let's discuss this as well. A potential new customer has asked MG for a 5% discount on any orders placed. This is a new customer. We are asked to advise MG on whether to accept or decline these terms, and we have to justify answer by, in the end, by recommending what the business should do. Now, the only fear, or the biggest fear for such business, would be that the existing customers would of course ask for the same discount, as they would say that if you are giving the discount to the new customer, why aren't we getting it? So this is one of the biggest problems that might arise if the order is accepted, but that doesn't mean that you reject the order. Of course, it will depend upon other terms as well, but if the order is profitable for the business and the terms are in your benefit, so of course it can be accepted. Let's read the sample answer. A possible fear for MG for accepting this order would be the likelihood of its regular customers, the other regular customers, demanding the same discount, the 5% discount that the new customer is asking for. This is the first point. Second is, if it rejects their demand, that is, the regular customers, the existing customers' demand, it would damage relations with them. So another problem. However, if it accepts their request, the discount given to all the business customers would reduce the business profit margin. So these are the potential problems that can arise if we accept this order. However, the benefits would be that if MG accepts this order, it is likely to increase business revenue for the new order, new sales, so revenue would increase. However, if orders in future are if orders in future are continued, future orders are also placed, then of course a positive impact on business revenue and profits. Another point. Hence, in my opinion, MG should accept the request of the new potential client, that is, allow 5% discount and try negotiating better terms with other customers if needed. It doesn't mean that if you are giving 5% discount to a new customer or to any customer, all the other existing customers would start asking the same discount, and if they are asking, it can be negotiated. Some customers can be allowed 5% discount, some can't be allowed, and the reason could be explained. So, politely, the situation can be handled. Therefore, I suggested that the order should be accepted. If you have points in on the against side, that why it shouldn't be accepted, you can write that as well. Both are correct. Okay, so I hope that this question helped us in revising a lot of concepts related to bank reconciliation statement, especially the theoretical part. So theory is important. It's important that you practice theory, you write it, so that you get a grip on it, and most of it is usually simple, such as in part C, part D, and part E. We were just required to explain the terms or write the uses, so it was pretty straightforward. So that's it for this video. I'll see you in the next one.